Hello and welcome to BISP Solutions. And so we are going to do sales tax processions that we are doing in the previous sessions. Okay, so let's continue about the sales tax, or we can learn about more about the sales tax and how we will record these sales tax transactions in the QuickBooks application. So we will move forward. So a question arises that when we do actual as I told you about how to raise a invoice when we are issuing the sales tax, when we are receiving a sales tax from our customers, and how to change the code, and we have also learned about the taxable and non-taxable code. Okay, and how we will create a agency of a tax agency. Okay, so now a question arises that when we do actually owe a tax, so that's come in mind as it does come in mind, as you remember that the accounting principle, or you can say the principle followed is of cash principle and accrual basis. So of course that comes in mind of cash accrual or accrual basis. Means when we receive invoice, whether we should receive the tax in accrual basis when we issue the invoice, or should we take the tax when we receive the payment from the customers. So it will take this. As we all know that we do double accounting on US GAAP and the accrual principle methods, or we can say most entity followed these principles rather than cash basis, as we all know. So all income and expenses can be recorded on that principle, as we already know about it. So the things come up for the tax as well, whether we record the tax on accrual basis or cash basis. We will see this, that there is an option available for us for we can receive the tax from the customer on cash basis, so we can pay it that we owe from the customers, or on accrual basis. But as we already seen in the application, it gives you the options about accrual or cash basis. So the application gives us the luxury to choose one of the method. Of course, in many softwares there is only a method followed by the accrual. We have to turn around, or doing some permutation and combinations to do a cash basis. Here we can choose it. The reports which generated through this application, whether we want to generate cash basis or accrual basis. So if we are on accrual basis, it means a tax is owed when the invoice is met. Of course, when we create the invoice, we owed the tax to pay the government, rather whether we receive the tax payment from the customer or not. When the due date is arrived, we have to pay the tax. Okay, but as we are on cash basis, the tax is owed when we actually paid. So suppose we receive the payment from a customer, that is the point when we receive the tax from the customer. Okay, or if the partial payment is paid, it means that partial tax we owed, means that the tax is owed will be proportionately. Yes, suppose you have generated $100 invoice, and you have received only $50. So the tax you receive, or you was owed, is on $50, not on $100. Okay, we will take an examples forward when we move forward. Okay, so suppose first I am showing you on the vendors list on a sales tax liability. Here we will take the all, and here you can see that we are doing the we are just right now doing in the accrual basis. So you can see that we have collected this tax. Okay, and when you go on the trial balance and you click on the sales tax payable, that is owned, we have this owed, and you can see this is the same balance as we owned here. Okay, so remember these reports will going to be changed soon. Okay, so now we move forward, and let's see what changes we'll be doing. So there is one report that I want to show you. Sales tax revenue summary. Yeah, here I want to show you this. here you can see that on taxable sales, this is all the taxable sales and this is all non-taxable sales. When you click on sales, taxable sales of Nevada, you will see the taxable sales receipts and whatever there is, and when you click on the non-sales taxable services, it will show you the non-taxable service transactions in a quick zoom. Okay, so now we will take a example on 10th of May. On 10th of May, we did 10 reports of financial documents for Miss Jennifer Gomez and we recorded the invoice for the transactions. Okay, for this we will just create a normal invoice from the customers menu. When we create an invoice and we change the date to 10th of May 2024, we will select the customer is Miss Gomez and we choose the item is of financial services and yeah, okay, we will just give him text here and we will write 10. Okay, so now here you will see that when we create invoice, okay, this Nevada sales tax, you can see that 200 tax is owed on the accrual basis when we just creating the invoice. When I click save and close, and goes to the trial balance, and here when I click on the sales tax liability, here you will see that we just owed 200 tax on this amount. Okay, what does this mean? This means that we already owe this. We don't know whether when we are going to receive this amount from the customer or not. Okay, but for this we just own this amount. Okay, again from the sales tax liability you will also see this. Just take NA, and on the Nevada sales tax you can see this 200 is already generated. Okay, so this means that we are right now doing an accrual basis. So what happens when we do on the cash basis? Okay, first we will close all these reports. Yeah. So now we move forward, and now we have to change something in the preference window. What we will change, you will see this. So on the main menu, again on the added options, you will go and see on the preference window, and here you will see the sales tax, and now you will see there is nothing for the personal preferences but my company preferences, and you can see it will ask you when do you owe sales tax, as of invoice that is on accrual basis or upon receipt of payment on cash basis. When we issue the invoice we are not going to owe this amount, but when we received any payment then we owe the tax. Okay, so we will select upon receipt on payment and we click OK. Okay, so now we will go. We will again create on the same for the Gomez. Okay, remember on the trial balance there is a sales tax payable of 766. Here you will see there is only 5 transactions. Okay, so now we move forward. Okay, so again from the main menu, here on the we will just go on the shortcut we have created invoice. We give the date of 11th May 2024. We give the Jennifer Gomez, and we did 10 legal documents. Okay, now give, okay, sorry, we give 10. Okay, now 120 is the dollar. If we are doing the accrual basis, this amount is credited to a sales tax payable liability account. And okay, but right now we have just changed it from the accrual basis to cash basis. Okay, so now we will click save and close, and let's see the numbers. Here you will see on the sales tax payable there is a 120 documents come up here. Why this is come up here? Because it is a sales tax payable, but on the vendors on the sales tax liability you will see there is no change in the, Here you can see there is no change in the report of the sales tax liability. Okay, here you will see the differences. Okay, so this is what I am telling you. Why? Because this has happened. Why? We will see this why this happened. Okay, you can see there is nothing on the sales tax liability which you can check it on double click. There is 108 and 90, and you click it, there is 200 and 168. Okay, and you can check it on the taxable services. So this is what I mean to say. When you change the preferences from there, the method from accrual to cash basis, it will take that you will owe the tax when you receive the payment. Okay, so now we will go and pay on 12th May, and what we this that we are receiving the half of the amount from the Gomez. Okay, so again from the customers, on the receive payment option we are receiving cash. Just doesn't matter. Change the customers is there, and the date will be changed to 12th of May 2024. Half of the amount is 810. And you have to uncheck this, and we have to click this. Now what happens? This happens that when we receive $810, the tax will be charged on 800 tax, not on 1620. You can see this when you click save and close, and okay, something has happened here. Okay, we have to change. Okay, now click save and close, and now you will see on the trial balance the tax liability is showing you $120. Okay, but what happens on the sales tax liability? You will see, and you will see the tax liability. You will see that 626 amount is increased. Why? Because on Nevada sales tax you have received the $60. That is, the original amount is 120, but you are receiving the $60. Okay, so this is how we can do from this transaction to that transaction. Okay, now what happens? That now the thing comes up that the sales tax liability account is different from the sales tax liability report. Why does this happen? Because here on the trial balance, I will take you here on the trial balance. Here you will see that it shows 126 here. Now you will see here it shows 886 on sales tax payable, and it will shows you 626. Okay, when you double click here you will see this amount. Why this is showing this amount? Because as you can see here on the sales tax liability, it is showing you that you are doing this on cash basis, and on the trial balance you will see this, that the trial balance report is generating it on accrual basis. So this is the main reason that it will giving you the difference between the sales tax liability account and the sales tax liability report. When on the trial balance on the customize option you will change to cash basis, and you click on OK, and now you will able to see this. You can see this, the sales tax payable liability report and the sales tax liability account is the sales tax liability balance is equal and same. So this is the so this happens when you change the reporting basis or the method to accrual from cash basis. Okay, so we'll just default it the accrual basis and we will close it. So this is how the cash and accrual basis related to the sales tax reports will be recorded in the QuickBooks desktop. Okay. So if you want to this on accrual basis, you can see this, the report will come up on 886, but when you just done it on the cash basis, it will show you the report is like this. So this is how the principle can be changed. Okay, we click on no, here also click on no. Okay, so now we move forward and a new, let me close all this. Now we move forward and now our next topic is come up, that how we will pay the sales tax. Of course you just collected the sales tax amount from the customer, but how you will pay the sales tax report. Okay, so we now understand that how to pay sales tax. So in here the question arises, when we pay sales tax, that is whether we want to pay monthly, quarterly or annually, depends on the state and the industry. We can set the remind this as well, so it can be remind us to pay the sales tax. Here you will see on the preference window, here you will see that you can just change the preferences of the application. When do you pay sales tax, it will ask you whether you want to pay the sales tax monthly or quarterly or annually. You can select this. Right now we just click on monthly and we move forward on OK. So now what will happen? Okay, so what will happen, we go on the vendors menu on the main option and we select sales tax and pay sales tax. Now here means so before moving this, I will tell you about the tax period. What is tax period? Tax period is the due date of the payment. So the due date of the payment is always after the tax period, right? Suppose means that when we sell on, when we January tax from the January sale, then in the next month we have February tax from February sales, then during February we'll have to pay January sales tax, then we accumulated during the previous month, it means. Okay, so it means when we pay the service tax, the amount owed does not become zero. We pay for the previous period but we still owe for the current period. It means that like on the trial balance, okay, so it means that when we are selling any goods or service, anything, the on in one particular month, let's say on May, okay, we collected the tax from the customer in May, but what happened, we will pay the tax on the next month, that is on June. Okay, it means that we have a frequency of paying tax in the next month. If we are paying the quarterly, then it will be after the 3 months. So whenever we receive a tax on that particular month, we are liable to pay the tax on the next month. Okay, it is accumulated during the previous month, of course. Okay, so when we pay the service tax, the amount we owe does not become zero. We pay for the previous period but we still owe for the current period. Okay, so now we will take an example. we will go to the sales receipts account. Okay, we just choose Steve Palmer, and we just choose financial services of 5, that is taxable. We change to the legal of service as well, and we change to 6. Okay, so we owed say 54, and we click save and close. Okay, now we have to change the date. We have just received on 1st April, and we click save and clear. Okay, and we move forward. Okay, okay, now when you see the vendors pay sales pay tax liability, sorry, when you go on the vendors on sales tax liability. Okay, so now we go and pay the okay, so we what happen so we have so what happens when we pay sales tax? That cash decreases, of course, sales tax payable decreases as well, and the amount of sales tax agencies also decreases. Now now we will pay the vendors when now we will go and pay the sales tax. So now suppose we are paying the sales tax of check date, when check date of 30th April. Okay, so we owe only Montana sales tax amount, that is 54. So if you select the check date of 31st May 2031, you can see that we are still owed to $680. That is the previous month as well, but we have changed the date to 30th May 2024. We owe only $54 here, so we will just adjust this, and the amount is paid. If you want, you can do print it. If you don't want, you will check a number and you click on OK. And now what you will see on the sales tax liability, all you can see that we owed 252 color, we have owed 252, but we have paid, and we owe $252 of tax collected on this May, but we have paid $54 on that particular month on 30th April. So the balance on Montana sales tax department is 198. So this is how we will pay the tax. And when you click on double here, you will see this, that we have credited 50, sorry, when you click on 98, you will see that we have cleared $54 debited of the April sales tax account, and it will be adjusted. So this is how we will adjust it. So what happens next is that on the trial balance, click on Citibank, click all, you will say this, we have paid the 54 sales tax department. Okay, so the sales tax liability will decreases. Now one topic is come up. Suppose what happens when we overpaid or when we underpaid the sales tax. What does this happen? Okay, what does this happen and how does this happen? So it is this feature is known as adjusting sales tax. Okay, okay, So this feature, it means adjusting sales tax. Why we adjust sales tax? Okay, because we underpayment prior period or overpayment in the prior period, or it may be because of change in the retrospectively. This is the three reasons mainly when we adjust the sales tax. Okay, so in QuickBooks Desktop, any adjustment to sales tax payable requires an other income or expense account to be adjusted at the same time. Okay, it is not correct to adjust sales normal income or normal expense. It means that the when we receive a refund from a sales tax when we overpaid it, it will not be an income, because if we collect it to little tax, sorry, if it is not correct to receive to put the income to put refund of sales tax into a income. Okay, so if we collect the little tax, we cannot call a previous customer and ask them to all to pay more. It's a customer, it's a mistake, so it's a expenses. Yes, if we underpaid it, so we have to pay the sales tax. Okay, if we collected too much tax, it is in the normal way we earn income, so it does not include the refund in sales. It will make you income for management decisions become incorrect. Now what happens happens that we will go on the now on the chart of accounts. We will create two account, that is sales tax refund, or that is sales tax refunds and refund of sales tax, or paying of sales tax amount. Okay, so we will now add a new account here. On other account type, we will use other income and we will continue it. Just give the name of 40 and we will give the name funds from sales tax, and we click save and close and move forward. Here you can see we have to make another account. We will click new, other type, other expenses, continue, give a account number here, and we can see payment to sales tax, and we click save and close. Okay, now how we will adjust it, how we will adjust this transactions into the QuickBooks application. So from the main menu, we will go on the vendors options. Under the sales tax, there is options called adjust sales tax due. So now we are just doing this. Okay, on 30th April 2024, the sales tax vendor is a Montana sales tax department, and the adjustment account is we overpaid it, so we are getting a refund. Okay, so we will get a refund from and what have happened, the adjustment, it is reduced sales tax by this amount. Suppose the amount will be adjusted here from the $14, so sales tax adjustment is overpaid. And when we click OK, and now you will see on that sales tax liability, here you will see this, that we have 252 tax collected and we paid $54, and the remaining balance left of $198. But when we receive the overpayment amount, we will get a refund of $14. Okay, so we have overpaid it. So we overpaid it. so it will get a minus and we will get $184 balance left. Okay, we have paid excess. Okay, so when we click OK, and we'll see on the trial balance, and we will see on the sales tax payable, there shows the $872 because $14 will get refunded. Okay, so what happens when we underpaid it? It is not a defaulted from the customer, it is an application error by us. Okay, so what happens when we do this? Okay, so on the vendors sales tax, adjust sales tax due, we will select the date. Sales tax vendor this time is of course Montana. Adjustment account will be the payment to sales tax, and the tax will be increased by $4. And what will happen, we'll see this underpaid. And when we click OK, and you will see on the trial balance, you will see the sales tax liability is increased by $4, and on the sales tax liability you will see all, and you will see this that it reduced a net, it gives a net effect of $10 and increased to $188. so this is how the adjustment of sales tax recording transactions done in the QuickBooks desktop. Okay, so now there is two more important topic of sales tax is remain. We will shall continue next, but right now I am just going to move forward and explain you about the mileage, how to track a mileage. Okay, so we will move forward. The sales tax, two important sales tax topic is remaining that we will do in the next sessions, because it will take it will be clumps up, because it is an advanced topic. Okay, that is maximum sales tax and maintaining an item of more than. Okay, so now we will go there. So now in most of the organizations and or in most of the business entity, when we assign a customer or employee, just stay with the employee part. When we assign an employee to go and work on a client or a customer place, suppose we gave XYZ customer to go to a XYZ employee to go to an employee, and the distance he covered between the office and between the business premises to the customer's office will be the distance. Okay, this is the mileage, and what amount he will get it from there, it will be defined by us. So it means so this recording transaction is means tracking mileage and repaying. In other words, we will call the conveyance. So again, from the company menu you will see this option, track vehicle mileage. When you click this position, and you will see the list of the tracking mileage vehicle. Okay, so now suppose we want to give this bill. Okay, you can just click on not billed, or you can you want to give a bill. So suppose the vehicle number is not there, we will add a vehicle number. We will add vehicle number 5462, and we click OK. Okay, the trip starts. So the trip was started on 30th on 1st May, and on 1st April. Trip will go to 31st May, and the odometer starts. You can write it odometer start and odometer state, and the difference between this is the miles, or you can just write via hands with 25 miles. Okay, so here, and customer job, which customer you assign to do that. So suppose we assign sell caro for this, and what I have the items. Suppose you want to give the items cancel it. We will just give in the financial services. So he went for the financial services, and it is a billable track mileage. And when you see the vehicle list, you will see only one vehicle. But if you want to rate the mileage, it will give you the mileage rate of can delete it, you can delete it, delete entry, and you give the mileage rate is of that is the per kilometer rate, or per you want to give 2. Okay, and you click on OK, and you click save and close. Okay, so you just and you want to see a mileage report, you can see here from here as well. So when you click save and close, and when you move and create a invoice, so okay, here we go and create an invoice, and now we are already tracking a mileage of Mr. Sal Caro. When you click Sal Caro, you will see it will ask you that it is a billable time cost, that is the customer or job we have selected has outstanding billable time and cost. Do we want to select the outstanding billable time cost to add this invoice, or exclude outstanding bill time and cost at this time? You may have to, if you want to, if suppose this window is not popped up when you create an invoice, then you can directly create add item cost, and from the mileage there is available here. If you gave him the timesheet, that we will discuss here, and if you gave him the expenses, it will be come up here. Whatever you want to add the time and cost to the invoice, you can add it. So we have just added. When we click OK, so the rate, and we click OK, and you can see it is a taxable and non-taxable, that is depends on you whether it will. So it will give you a brief that you can create a tax mileage, and when you click save and close, it will ask you want to create a number. You can just skip it, and it will show you like this. So this is how you can track a mileage from a for the customer or anything. Again, in the edit preferences here, on the times and expenses, it will ask you whether you want to track a time, and if you say yes, you want to track a time, it will come here on the track mileage. I am just talking about the track mileage. Advanced track mileage is unavailable because we are using a multiple currencies. Okay, if we are not using any multiple currency, that will I will show you the SS in the next session. So it will give you an advanced tracking mileage, and you can go and create your scheduled for that particular mileage of the tracking. Okay, so you can move forward, so you can create, or you can make the scheduled. You want to give the status of the mileage, whether it is ongoing, finished, or delayed, anything. You can create a full schedule on there. Okay, again on the reports, you will see the mileage. Here you will see mileage by vehicle summary. If you want to see the vehicle summary, you will see all the reports of this mileage by vehicle summary. If you want to close, you want to see the another report here. Again, here you want to see a detail, you can see the more detailed way, that a vehicle number is that, trip end on this date, total miles he has traveled this, and mileage rate is as well. Okay, when you click this again on the reports option, again you'll see another report, the mileage by job summary. If we assign the mileage by job summary, you will see this. We have not assigned any job, only we have given the miles and billable amount. So by this as well, we can track the mileage and the reporting in the QuickBooks desktop. Okay, so this is how it will create it. So yeah, in the last sessions we were talking about the here it is also called the merge. there is also one option called merge vendors. Suppose you have two or more vendors that is merged, and it will become a one merger. And if you want to do a payment, but you have to pay to that particular merge vendors. So from this features, merge vendors, this option is done. We are using the multi-currency features, so this option is disabled for us. Okay, so we cannot move forward by this. Okay, and here's the document of feature as well available. You can attach your documents on the cloud basis rather than on you are recording on the cloud. You can just post it this on the this doc center, and you can retrieve anytime you want. Okay, so this is it for the today's sessions. We will continue in the next sessions, what is probably our last session of the sales tax, and we will do some payroll activities, some basic payroll activities in the next session. So thank you for joining us today's session, and I hope you have understand about the adjustment of sales tax and how to pay the sales tax. Okay, thank you for the joining.